Okay, so you've probably seen the headlines, right? The markets in the Middle East, especially Dubai, are taking a massive hit. Now, a lot of people see that and think, crisis. But you know what? A smart investor often sees something completely different, a sale. Let's dig into why.
All right, let's just get right to it with this big, flashy number, 37%. That's how much the Dubai real estate index has dropped from its peak. I mean, that's a staggering number. And when a key part of the economy, like real estate, takes a dive, it usually signals something bigger is going on. Now, a number like that might scream danger to most people. But for an investor, well, it can mean something else entirely.
So that really brings us to the big question here, doesn't it? Is this whole situation a crisis you should run away from? Or is it one of those rare opportunities to get into a major market when everything's on sale? That's exactly what we're going to figure out today.
Okay, I know what you're probably thinking right now. That all sounds great, but how am I supposed to invest in Dubai or Qatar? I don't have a bank account over there. And look, you're not wrong. Investing directly in another country can be a real headache. It's a huge hurdle. But what if I told you there's a surprisingly simple way around it?
So here's the secret. You actually don't need a bank account in Dubai at all. The real gateway, the key to unlocking markets like the UAE or Saudi Arabia, it's actually the US stock market. And there's a special kind of investment tool there that you can access easily, right from India.
And that tool we're talking about is called an ETF, an exchange-traded fund. Now, don't get thrown off by the fancy name. Seriously, don't. The easiest way to think about it is this. An ETF is like buying a whole basket full of different stocks, all in one go. Instead of buying one thing, you're buying a bunch of stocks at once. It literally lets you invest in an entire country's economy with just one click. So here's the bottom line, and this is really important. Why would you bet on just one horse when you could bet on the entire race? I mean, you could try to pick one winning company in Dubai, maybe like MR Properties, but that's super risky, right? A single company can go under. But with a country ETF, you spread out that risk. You're not just betting on one company. You're making a bet on the recovery and growth of the entire country's economy. Much simpler.
Okay, let's go back to that big number for a second. 37%. That drop looks steep, and, well, it is. But here's something most people get wrong. To recover from a 37% drop, the market doesn't just need to go up by 37%. The math is a little counterintuitive, and that's actually where the real opportunity is hiding.
And here it is. This is the magic of investment math. Think about it. To climb out of a 37% hole, you have to gain back all that value. But you're starting from a much lower base, so the percentage gain you need is way bigger. In this case, it's a whopping 60% gain just to get back to where it started. This just shows you the massive potential upside when you manage to buy low.
All right, enough theory. Let's get practical. If this idea has you interested, what should you actually be looking at? Let's build your Middle East watch list right now.
So a great place to start is the iShares MSCI UAE ETF. That one gives you really broad exposure to both Dubai and Abu Dhabi. But hey, this isn't just a UAE story. You can also search for ETFs covering Kuwait and Qatar. They're also seeing some of these same corrections. And you definitely can't forget Saudi Arabia, the biggest economy in the whole region. There's an iShares ETF for them too. Basically, these are the tools that let you strategically invest across the entire Gulf.
And you know what the best part is? The actual process is incredibly simple. Seriously. Step 1, you just open an account on a platform that lets you invest in US stocks from India, something like IND Money. Then you just go to the US stock section, type the country name like UAE into the search bar, and you invest. That's it. You can even buy tiny pieces, fractional shares, which means you can get started with just a small amount of money.
Okay, let's zoom out for a minute. This whole situation in the Middle East is a really fascinating case study, for sure. But it actually points to a much bigger, much more powerful idea for any investor who's serious about long-term growth.
And this quote right here, it just perfectly captures that mindset. The whole idea is to stop being stuck in just one country's market. The real goal is to find a way to invest that automatically goes where the growth is, no matter where on the planet it's happening.
And that special vehicle? It's the Emerging Markets ETF. You can really think of this as the ultimate tool for diversification. With just one single investment, you're suddenly buying into a whole portfolio of the world's fastest-growing economies. We're talking places like India, Taiwan, Brazil, and more. It's a strategy that's designed from the ground up to capture growth on a truly global scale, not just in one little corner of the world.
So all of this leaves us with one final big question for you to think about. Your portfolio might be doing great investing in India's amazing growth story, and that's fantastic. But is it thinking globally? Are you really set up to catch these kinds of opportunities, not just here at home, but anywhere in the world a market suddenly goes on sale?